Well, good afternoon and welcome to our online presentation. Today we are joined by guest speaker Tony Davies from Zurich International Bank, and together we'll be having a look at the attraction of structured deposit accounts to charity investors. Today's presentation will last approximately 15 to 20 minutes, and we will have time at the end of the presentation for questions and answers. In terms of the agenda today, I'd like to give you a quick introduction to Origin Financial and the services that we provide. Obviously, we're going to have a look at an overview of what structured deposit accounts are. I'll then hand over to Tony, who will be explaining about Zurich International and the products that they have on offer in the marketplace. We'll also look at a quick example of a charity investment case that invested in 2009. And so at the end we'll have time for questions and answers. So for those people who are unfamiliar with Origin, I'd like to take this opportunity just to briefly explain and introduce the service that we provide to charities. Origin Financial is a boutique-sized firm of independent financial advisors. We have our head office based in Hagley near Birmingham, and from there we do provide a national coverage to charities and non-profit organisations. The charities that we work for do range from different sectors and different sizes across the UK, and always the focus is on building long-term relationships with our clients. Key to our service is that we are independent. We're not tied to any bank, building society or financial institution, and the main aim of our service is to assist charity trustees to fulfil their duties, meet their responsibilities. We also aim to take the hassle out of managing the various issues or financial topics internally, and at the same time we'd aim to leave you with a nice audit trail that documents how various decisions have been made along the way. In terms of the services we provide to charities, it's split into four areas. We provide advice on banking and cash management, which is where we see structured deposits fitting, obviously the topic of today's conversation. We also provide independent investment reviews for looking at the longer term investments that your organisation may hold. We offer a key person contingency planning service, so this will be looking at how to protect your organisation against the unforeseen loss of its key personnel, directors, trustees, etc. And for the larger charities, we also offer an employee benefits service where we can look at putting various benefits such as death in service or workplace pensions into place, or if you have those schemes in place already, we can offer a review service on those. So in terms of providing an overview to structured deposits and looking at what those are, I just wanted to point out some of the key features of what's offered if you were looking at taking out one of those products. So that the main attraction is obviously that like a normal deposit accounts, you have capital protection, and at the end of the term and on maturity of these products you will be guaranteed to get your capital back. However, the key difference here is that these products offer the potential to achieve significantly higher returns when you compare them to normal interest-bearing deposit accounts. The reason for that is that returns and the performance of those returns are based on the performance of an index or a commodity or basket of shares. So these could be linked to, for example, the FTSE index or commodities such as gold or precious metals, or they can be designed around a basket of individual shares. So that's where the performance comes from, and as mentioned, that can give you the potential to get those higher returns. The downsides of the product, obviously, if the investment does underperform, there is the potential that you may receive no capital growth or income, whereas on a normal deposit account you would be guaranteed to get a fixed amount of income. The other thing to bear in mind is that throughout the term of these products you do not have any access to your deposit monies, and terms typically range from between 3 and 6 years. So I'm now going to hand over to Tony Davies from Zurich Bank International, and Tony's going to explain where Zurich fit into the marketplace and also give you some further information on their Jade product. So over to Tony.
Thank you, Simon. Good afternoon, everybody. Thank you for joining us on this seminar. It's a great privilege to be able to speak to you this afternoon. I represent Zurich Bank International in the Isle of Man, part of the Zurich Financial Services Group worldwide. For charities, we find the most important part of any decision-making process regarding bank accounts is the financial security of the institution that you're investing with, because like most non-incorporated bodies, if your assets exceed £1.4 million, then the statutory protection available in the UK and the Isle of Man isn't available to you. So the security of the bank that you're depositing with becomes absolutely key to the decision-making process. Zurich Bank International, part of the Zurich Banking Group, is part of the Zurich Financial Services Group worldwide, one of the largest financial businesses in the world. We've been operating as a bank since the 1990s and have been offering these accounts since that time. Obviously they've developed and progressed during that time, but essentially they are still the same thing, just term deposit accounts where your interest is linked to the performance of a chosen stock market rather than bank base rate. So the key things about the bank really are what we do and indeed what we don't do in the market. Well, Zurich Bank International is a licensed deposit taker, and these form a very, very key area of the deposits that we take. In addition to that, we do some foreign exchange type activities for some of our expatriate clients. But as a deposit taker, we are not involved in lending. We do not have a high street presence. We don't offer current accounts. We don't have any form of loans or mortgages, and we're not an investment bank as such. We're just a deposit taker. So it's very difficult to establish a set of circumstances where you think a deposit taker could get into trouble, because we're just not involved in any of the more hazardous areas of banking. But if the bank did get into trouble, we are backed by the global Zurich Insurance Group worldwide, and that parent has put in place various parental guarantees and surety bonds on behalf of the bank. The strength of those guarantees can be best tested by the way the rating agencies look at us. The Zurich Bank Group, which includes Zurich Bank International, has got its own independent ratings, and for example our Standard & Poor's rating today is AA- stable, so considerably better than most of the high street banks. So what do we do and how does it work? Well, your charity deposits with us over terms of between 3, 4, 5 years, and if you place say £1 million with us, basically every penny of that deposit remains on deposit in your charity's name untouched for the duration of the account. The way we create the returns or interest payments on your account is by means of utilising derivatives which we purchase from leading investment banks. How we purchase those derivatives and where we find the money to do that is at the same time as we purchase the derivatives, we sell on the normal interest that we would be providing on your account by means of an interest rate swap. So we offer the investment bank the normal interest on your money for the next 3 or 4 years, and we ask them to buy that off us today for an upfront payment. It's just a simple discounted cash flow calculation, and it's that money that we use to buy the derivatives that create the interest rate return for you. Now, key to all these accounts is a clear understanding for you of the counterparty situation. So because all your money remains with us untouched for the duration of your account, at first sight the counterparty risk would appear to be the risk of the investment bank, say HSBC or Barclays, defaulting on those derivatives and therefore your interest payments. But uniquely in the market at Zurich Bank, we build in a level of protection to protect you against that type of eventuality, and that's called collateralization. Now, all that means in practice is we regularly go back to the HSBCs and Barclays that we've been dealing with and we ask them to deposit with us amounts equivalent to the potential payout on the derivatives we bought from them at the end of the day. So in effect, we're holding the money to pay out on those derivatives at our bank for the duration of the account should there ever be a default. So therefore, we've completely removed any counterparty risk. So your risk is solely the risk of something happening to Zurich Bank, and these are the points I highlighted a few minutes ago, which hopefully allay any concerns or fears there. So that's what happens behind the scenes. Let's just take a moment to look at the positioning of these accounts in your portfolio. Now, as the slide says, these accounts are not aimed at being an alternative for money that you're happy to take stock market risk with. Our belief at Zurich Bank International is if you're happy to take that risk on a section of your money, then you should just do it. All we're offering here is an alternative, and a simple alternative through traditional deposits for some of your longer term money. So the opportunity here to earn a bit more interest on some of the money that you're never going to expose to stock market risk. So diversification is the key here. And what I'd like to do finally before handing back to Simon is just spend a moment or two looking at one of our more popular accounts, and Simon's got a case study on this for you in a minute. Also, as part of the follow-up, we've got significant levels of detail on these accounts that we can let you have available. But our Jade account was introduced 3 to 4 years ago, specifically with charities in mind. As such, this account is linked to the UK stock market. So our challenge is to create an account for you that can work in what people expect to be the market conditions over the next few years. Now, if you speak to any of the industry commentators at the moment, or some of the fund houses, to a T, what they will tell you is, if you look at the major UK companies, they're pretty healthy. They've got full order books. In many cases, they've been reducing corporate debts, and in some cases, buying back their own shares. And historically, they're on very, very attractive PE ratios, so good potential values there. Having told you all that, the investment manager would then typically go on to tell you that also, whilst we see the market going up over the next few years, we don't see it going through the roof or doubling or trebling from current levels, and we see the potential road to any growth being a volatile or potentially bumpy path for you. So our Jade account was designed to compete in those market conditions. Now, the account's available over various terms from 3 years upwards, and traditionally what happens in the charity market is you buy a series of bank accounts over differing terms to get rolling maturities. Depending on the term you choose, the longer the higher the interest rate, but just to give you a feel for it, you can get rates currently where the maximum annual interest you can earn is up to around 8% per annum. So with that in mind, compared to traditional deposits, there's considerable potential upside on offer to merit some diversification for some of your money. As I said a moment or two ago, it doesn't have to perform anywhere near its maximum in order to get you a better return. So what I'd like to do now is pass back to Simon, who will take you through an actual case study which will hopefully illustrate that point for you. Thank you, and we'll be pleased to take questions at the end. I'll pass back to Simon.
Thank you, Tony. So yeah, as Tony says, what I want to do now is just have a quick look at an example case from a charity investor that invested back in 2009 in this particular product. Now, the first thing to remember is that back in 2009, the LIBOR rates were much higher than they are today, and as a result, the coupon offered on the Jade account in 2009 was 15%. Comparing that to rates on offer from normal deposit accounts, we sourced a product from RBS over a 5-year term, and that was offering a rate of 6.5%. So as you can see, the Jade product back then was offering potential to earn considerably more. The product term on this example was 5 years, and what I wanted to do is have a look to see how it's performed since 2009 over the last 3 years. So in year one, the coupon that was returned was at 11.04%. In year two, 12.9%, and in year three, 9.32%. So whilst the product hasn't delivered its full potential as 15, it still delivered considerably more return than you would have been able to secure in a normal deposit account. As mentioned, the rate at the time was 6.5%, or circa that, an example from RBS. Obviously, if you wanted to have it compared to today's rates, the best rate that we could find over 4 years was around about 3.5%. As Tony mentioned, the Jade product is currently offering about 7.58%. So I hope you found that a useful introduction to structured deposit accounts. Now I'd like to throw the seminar open for any questions that people might have. Okay, looks like we've got somebody typing a question here at the moment. And the question is, what is the financial security of these products? Tony, do you want to take that question?
Yes, I mean, the financial security of these products, they are just term deposit accounts, so they rate in exactly the same space as ordinary bank deposits. So the key things are what I alluded to a few moments ago, the financial strength of the bank you're depositing with, which with ourselves at Zurich Bank is AA- stable, because as I said, you know, statutory protection isn't that relevant to larger or charity type investments, so that becomes absolutely key. I'll just pass back to Simon.
Thank you, Tony. We also have another question that's just been typed, which is on a scale of 1 to 10, with 1 being low and 10 being high, what is the risk of these products? I'll take that one. So I would say that on the risk scale, where the J product and these types of products are typically positioned is probably around about a 3 to 4. Obviously, the reason for that is that these products do offer capital protection. So at all times, you know that you're going to get the return of whatever capital is invested as long as you hold it to maturity. Depending on the structure of your charity or the size of your charity, you may also qualify for the Financial Services Compensation Scheme. Although what you do need to remember is the downside is if these products do significantly underperform, that you may not see any capital growth or receive any income on those. So there is a risk there, but on the whole we feel that these are it's a good level of risk compared to where you can put your money or what other options you've got to do with you've got to take with your cash deposits. Do we have any further questions? Okay, so it doesn't look like we can have any further questions, so we'll wrap up the presentation there. If any of you are interested in obtaining further information, my contact details are now on screen. So if you want to get particular fact sheets on the Jade product or find out how we can advise you on structured deposits, please do get in touch. You can email me or phone me on the free phone number. There's also further details on our website, which is origin.eu.com/your-charity. And this presentation, along with other webinar presentations, will be uploaded to our YouTube site, which is youtube.com/origin-financial. Thank you for your interest today, and hope to welcome you on future presentations. Goodbye.